Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're here to bring you yet another episode, and today we'll be focusing on TransJamaica Highway Limited and Grace Kennedy Group. Joining me today will be Justin Scott, who's a regular face to the program and our investment advisor. Welcome, Justin.
Glad to be here as always, Dan.
Excellent. Don't forget to subscribe to our content, and if you like the channel, hit the bell to stay up to date with all things Mayberry related. We upload content just like this once a week. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, up first, as promised, TransJamaica Highway, which will be presented by Justin Scott. Over to you, Justin.
All right, viewers, I'm glad to be here again this evening. So first, we're touching on TransJamaica Highway Limited, right? So TransJamaica IPO'd in February 2020 at about a $1.41 share price, just about everyone. So this was a huge IPO. I believe it was the biggest one done in Jamaica's history to date. And this was, it was a big shift in the way how our markets operated. And I'm being quite literal here, as the actual IPO itself removed a lot of liquidity from the markets as people are getting ready to go to enter it. Pension funds, a lot of institutional investors, a lot of you yourselves have even participated in the IPO. And here we have now the most interesting set of results that I've seen thus far. So let's get right into it. So for the first quarter ending March 2023, we have an increase in revenues by 21% from 14.8 million US to 17.9 million US. The operating expenses were reduced 44% down to 5.4 million USD, which came from a reduction in operating expenses that TransJamaica would have paid out into Jamaica Infrastructure Operator. I'll get back to that soon. Admin expenses were increased quite a bit, and I'll get back to that soon as well. Finance costs remained the same, and the net profit before tax increased significantly from 1.1 million up to 6.6 million USD. Net profits after tax, roughly around the same. But let's get into why there was an increase in the operating expenses as well as admin expenses. So in December 2022, TransJamaica Highway acquired JIO, and that acquisition was really significant because JIO was an operator for the actual toll services themselves, and so it only made sense for TransJamaica to go forward and acquire this entity that was attached to them, that they had to be paying to operate on something that, they were doing themselves. So they acquired the conjoining company, and then that reduced the operating expenses that's paid out while increasing the amount of profits that they're now able to retain, as well as they gained, a cash cow later on as soon as dividends are paid out. So they acquired 51%, but effectively 99.9% because they paid the full compensation for the acquisition, as well as they have a call option that takes place on December 9, 2024 for the remaining 49% of it. All right, and if we take a look at the balance sheet, we see that the change from 2022 to 2023, there was a 5% fall in assets. That's as a result of a $13 million amortization over the right of use asset over the highway itself, and then significantly an 18% reduction in shareholders' equity from 54.8 million to 44.9 million, which came as a result of the $11 million loss that took place in Q4. Let's get down into numbers. Closing price at the end of the 16th of May was $1.88. This is a huge run-up from about mid to late March, where it was about $1.35 to $1.40. Can talk about that a little bit further. The PE ratio right now, it is not, well, we're not using the PE ratio for this instance because of the trailing loss that took place because of that big hit that they took in Q4. Book value per share is still 55 cents. The price to book value is 3.74 times from there. And as I said earlier, the $2.8 million trailing dollar loss. But right now, if they're currently doing 4.9 million per quarter in terms of net profits, and I expect that to continue, so we can analyze that a little bit further. We can expect maybe just around like $20 million in profits. So that's going to be offset really quickly by the next quarter. I should see that in a positive figure. 52-week high of 220 and a 52-week low of 130. So yeah, this stock is really on a move since this year. People are really starting to love TransJam. In terms of profits right now, we can see from early 2020 to about late 2021, quarter profits weren't doing so hot at that point in time. But at the end of this January 2022, we were completely out of lockdown period. So there are no more lockdowns. There was no more restriction on travel. So the numbers that you're seeing at the end of 2022 or is a complete and proper representation of how the highways should have been doing up until that point. And then boom, by the end of December 2022 with the acquisition, it's just going to be getting that reduction in operating expenses and that boost towards the profits. So in that fourth quarter 2022, that's that big hit that we would have seen right there. And then further from there, now I'm expecting the quarterly profits to be in that 4.8 to all the way up to $6 million in terms of net profits that we can expect it annualized going further. Moving further away from there, the next slide, you'll be seeing the stock price history. As I said, 2020 to 2022, we wasn't getting a whole lot of love. Kickstarted in 2023 now with further news coming out about the acquisition, and even further from there with the expectation of the completion of the Williams Field Maypen leg. That's going to add about another 28 kilometers to the existing 50 kilometers of highway. However, I don't believe that the price is the toll rates based on the distance, but the price is more in terms of the travel that takes place on there. And so that's going to be very interesting once that gets completed. And then, as a matter of fact, I'm hearing rumors about there's going to be an addition. So not just from Williamsfield, but into Hogarth in St. Elizabeth, that's going to add some additional space towards there, making it only so much more viable for people to continue using the highway. So just last point in the stock price, it moved up from about in, I want to say, March, when that big hit came. There was a trade of about 75 million units. Somebody really started to believe in TransJam from there, and then that kind of pushed the needle a lot on. So yeah, TransJam for me right now, it's a very interesting company. For the dividend lovers out there, this is one of the stocks for you, alongside companies like Carrera, Supreme Ventures, and otherwise. So it's definitely going to be something that people are looking forward to right now. A lot of you guys who would have gotten in from the IPO days would still be holding up to now. This is just over I want to say over 30-40% increase from share price from the IPO. And that's why when I saw the stock price at $2.20 as a high on May 16th, that represented a big turning point. It kind of hit a high for me from there. And, with all new highs, we're going to have a little bit of a retracement. So, you guys that are interested can start looking at the price from below that $2 mark, and with the expectation of forward earnings to continue catching up, and with the new legal highway to continue pushing it even further.
Great, thanks for that, Justin. Yep, I'd like to watch this one for another quarter or two to really see them get out of the red. That fourth quarter hit was pretty big. I like the acquisition strategy, and I think it's going to make the business more profitable going forward. I'd like to see what happens with the Williamsfield leg, how they price that. I don't see that increasing revenues by more than 5 to 8%, though, because I think the lion's share of their revenues still come from the Portmore tolls. Interesting business. I wish the concession had a longer period to it and we understood how the concession will be renewed. We don't know the terms on which the concession will be renewed and the capital cost or purchase price that they'll have to pay to get this new toll that's coming. So there are aspects of the stock that I'm not the biggest fan of in terms of long-term investment. I like what it represents. I just don't like how the deal was structured, quite frankly, because you don't own the highway. You really just have a concession to collect tolls on the highway, which has a very finite lifespan, and then we don't know the terms on which that's going to be extended. But for the medium term, I think it's a good one to watch. Since IPO days hasn't really impressed, we've finally seen the stock price moving. So I'd like to watch it for another quarter or two. I'd really love to see this run rate continue, but with $2 million of trailing losses, I'm sort of on the fence watching this one. But I do think it's a great concept, great idea, and I really hope that they will do well in the future. Thanks for that, Justin. Appreciate that. Up next, we move over to GK. Now, here's a company that's been around for about 100 years and is not going anywhere. Rock solid, blue chip company that's one of my favorites. And looking at the results for the first quarter ended March, we can see revenues are up 8% to $39 billion. Operating costs up by 7% to $37 billion, but the profit from operations increasing from $2.44 billion to $2.88 billion, a 18% increase. Also seeing small improvement in share of results from associates, and that helps the profit before taxation to increase by 21%. And then finally, the profit that's attributable to shareholders, because there are some small minority interests, $2.11 billion, up by 22% over last year. So impressive results. 8% growth in revenues translating into 22% growth in profitability. When you think of GK, there are really four divisions: the food, the bank, the insurance, and the remittance services, with about 80% of the revenues being driven by the food division and about 70% of the profit. So it's really, got a strong food division brand, and that's great because we saw the profitability of the food division increasing substantially by about 40% this quarter over same time last year. So great to see that with good performances pretty much in all of the regions that they represent: US, UK, Belize. They mentioned an MD&A for the quarter, which you should definitely read their actual detailed quarterly financial results. Some small challenges with logistics in Canada, but for the main part, they're doing exceptionally well in the food division in the four main regions that they operate. And then the next largest division in terms of profitability is really GK Remittance business, which contributes about 25% of the profitability of the business. So it's primarily about what they do in food and division and what they do in the remittance business. That business was flat year over year, both in terms of revenues and in terms of profitability. But it's great to see some good announcements in relation to the remittance division. Two great announcements. One, they're doing a deal with Unicommerce Limited, or Courts. Subject to regulatory approval, we should see the remittance business being rolled out in about 50 new locations wherever Courts are in Jamaica. So that's great. I look forward to that. That should certainly help drive profitability there. And secondly, they inked a deal with NCB's Link, or their remittance, their mobile wallet service, I beg your pardon, where we will also see the Western Union remittance services being offered in a digital wallet through Link. So again, two great moves there for the remittance business, and that makes me very hopeful that we'll continue to see growth in the remittance business. A very strong brand, GK, hard to bet against them, and it's great to see the profits jumping like this. In terms of the balance sheet, total assets topping $200 billion for the first time, and we see shareholders' equity also growing by 9% to $79 billion, with only about $4.5 billion of non-controlling interest. So great brand, great results, growing from strength to strength. It's a really impressive conglomerate. Share price at $82, which represents a PE of 10 times based on trailing earnings of $7.98 billion. 10 times PE is fair in the market today, I would say. But we do expect as interest rates start to trend down, and this is going to start to happen within the next 3 to 4 months, folks, in Jamaica. I'm expecting to see PE ratios going back to about 12 times for the main market. And so I really expect at least 20 to 30% growth in the stock price because the profitability is coming, as well as we expect PE ratios in general to be increasing. GK is a conglomerate, and it's a little bit difficult to read, and I have to say, the investment banker in me would love to see them spin off the bank and insurance segment as a standalone listed entity, and I bet the market capitalization of the group, believe it or not, by separating them would increase, and that would perhaps also allow the bank to be able to raise additional low-cost funding if they wanted to do an equity raise for the bank and insurance services. So there's some free advice for the greats of Don Webby and Professor Gordon Shirley. Great management team over there at GK again. So it's really hard to bet against a strong company with strong management that's been around for 100 years, that's well positioned, has a great brand, and is growing. So this one's definitely a buy for me. Next slide shows the profitability trend, and you can see, over the last 3 quarters, the growth in profitability up to $2.1 billion, the third time in 2 years that they've made more than $2 billion profit in a quarter. So that's great. And I expect to see this trend continuing with all of the expansion moves that we're seeing. The insurance business, they've just completed the acquisition of Scotia Insurance Caribbean, which puts them into 12 new territories throughout the region. So this business is expanding throughout the diaspora, throughout the Caribbean, positioning themselves well and using this very strong brand. Next slide shows the movement in share price. So the stock's being as high as $114 in the last 2 years. Now down at $82. It's had a low of $74.50. So I do think we can see and will see That stock price growing by about 20% within the next 3 to 6 months, which takes it pretty much back to the previous high that we've seen of about $114. I think that's coming soon. So I think it's a great stock to buy, good one to have in your portfolio for the long run, because as I said before, they've been around for 100 years. They will be around for the next 100 years, and we'll continue to see them grow from strength to strength. Very few conglomerates that can be compared to GK, quite frankly, with $200 billion in assets, $79 billion in shareholders' equity, over $55 billion in retained earnings. So great, solid company. That's my view. Justin, what are your thoughts?
Thanks, Sad. Yeah, Grace is a really strong company. I definitely do love them as a company, and as you were talking about earlier, the growth in revenues, the branching out further and further, the ventures that they're working with NCB in terms of link. So that's a great point actually, because remittance services are a big part of Grace Connect's operations. And while Jamaicans are very much bent on remittances, it's really interesting to try and figure out how to grow that service in Jamaica when so many people already utilize it. And partnering with Link to receive those remittances is a great idea, because while we may not have a proper distribution of internet services island-wide just as yet, we are very much attached to our cell phones. I think Jamaica is one of the highest cell phone inclusion rates in terms of the entire world globally. So when you have the services on their phone that they're able to contact the family or people abroad to receive the money directly to their phones, it's a real great way of including people just like that. But as far as the company goes, yes, I do like it. As far as the stock goes, I'm not entirely so totally optimistic in the growth of it in, say, the next 3, 6, or maybe even 9 months. As I said earlier, I would love to see Grace Kennedy do a real carving out of the businesses and separating their money services, the insurance services, the food services, just kind of like how we did with Lasco, and even further from there, or maybe even a stock split, so it can get a bit more liquidity out there, so people can start to see Grace Kennedy a bit more as a stock rather than just as a big corporate company, and so it can really entice the retail investors a bit more. But as it is, that's great. I'm sure Grace Kennedy will continue with great business. I'm looking forward to more things from their investment arm for Grace Kennedy Cap. Let's hope so for some more ideas this year. But yeah, as far as Grace goes, I did.
Great. Well, thanks for that, Justin. Yep. GK is just a great blue chip company that you want to have in your long-term portfolio. Again, this company is just going to grow from strength to strength, and with $80 billion of market cap, I think we're going to come back in 2-3 years and see that they've topped $100 billion in market cap and continues to grow and execute. Again, great management team. Congratulations, Don and Prof. Shirley, for the great job you're doing. Think about what Justin said. A stock split could help improve a bit, but it's a great stock, trades with good volume. We're a big fan of it. So, well, that's it for today's discussions. Big thanks to our viewers for tuning in. We couldn't do this without your support. And I'd like to give special thanks to Justin as well for his contribution. Thanks, Justin. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. So give us a follow to stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. So folks, keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.